All right, all right, all right. Welcome, everyone. Welcome, welcome, welcome. We are live, I think, anyway. um, all right, all right, all right. Welcome, everyone. All right, guys. So I think we're live right now. I think everything is good. Welcome to today's live stream. I'm really, really, really excited for today. Been having a bit of interruptions here as I speak. And yeah, so we are good to go now for this live stream today. Today, guys, in this live stream, I want to be covering the actual market itself and what's going on right now when it comes to the actual stock markets and what's happening around the world, what's happening around the globe as well too. So I'm really, really, really excited for today's session, guys. Again, I've been trying to do. Been setting up this live stream to help you guys out. For you guys that are watching the replay, I apologize for the first few minutes. I'm just trying to set this live stream up as much as I possibly can. So that's what I want to share with you today, guys. I'm really excited for today. I just want to share with you what's going on with the overall stock market itself and what's happening through there. I think there's a lot of exciting stuff that's happening right now in the market, and I definitely want to be. I definitely want to be sharing you with everything that I see in there. So let me just get started now, guys, and then I'm going to be definitely getting involved and sharing with you what I see happening in these markets today. So let me just bring up the typical disclaimer, guys, and then we are going to get started. Let me just bring up the good old disclaimer, and then we will get started into today's session. Alrighty, guys. So, guys, do not place a trade based on what you see in this session. Today, trading is risky, and it can cause substantial financial loss. There's no guarantees of actually making a profit in the market. So, be smart about the way that you are trading these markets, and be smart about the way that you are getting involved with these markets as well too, guys. And guys, if you haven't done so yet, then make sure you head on down to johnsfreegift.com to grab your free trading course to start learning how to trade these markets successfully today. Again, it's a free course. There's so much in there to really, really, really help you out. Alrighty, guys, let's get straight into today's session. I want to talk to you about what's going on in the stock market right now and what's happening right now in the market. And I'm really, really, really excited to share that with you. Right now, guys, we are getting exactly what I thought was going to happen in the markets. And right now, what's actually happening is that we're getting exactly what once again what I thought was going to happen, and that was the pullback. If you guys have been watching my YouTube videos, the first thing I did say, if you've been watching my videos, was that gold. This is actually the gold chart through here. I was actually saying recently about how I see gold actually having a bit of a move to the downside. If I blow this screen up through here like this, I was saying that I'm expecting to see gold actually have a bit more of a downside movement. We actually got that drop, but we're actually at a very long-term trend line, and also same for the actual stock market as well too. Stock market has actually dropped, and once again, guys, I was talking about for the last sort of week that I was expecting this pullback to happen. We probably have a bit more downside to come out of this here. This is probably the start of the move. But there's a lot of things that I'm actually seeing here with the actual stock market. So that's what I want to be covering, and that's what I want to be sharing with you when it comes to the actual market itself and what's going on there as well too. So that's what I want to share with you guys. So let's actually get straight into it. The first thing I do see, guys, is when it comes to the actual stock market itself. As you know, for the last week, I've been saying down move, and we actually got a very nice down move today. What's that? The Dow Jones got down 444%. How about those? How about those, eh? How about those apples? 444% when it comes to the actual markets itself. And we got a very nice drop to the downside today. I actually see a lot more movement on the downside coming. If I bring this up to here, if I blow this screen up now, and looking at this screen right here, I actually see that there's probably a bit more downside to come. But here's the thing that I say about the indices, right? And let me actually just let me bring this screen up to you for a minute here. Okay. Here's what I say about the indices that I do see. Firstly, once again, if you've been watching my videos for the last week, I've been calling a down move. And you know, even yesterday I did a video saying get ready for the down move, and we've actually got that. So it's I'm very, very, very in tune right now. I called the gold move, and the gold actually dropped. And I even said the stock market's about to drop as well too, and that's exactly what's happened. So I'm very in tune with what's happening right now. But with all that being said, the thing that I am seeing right now when it comes to the actual stock market itself is that I'm seeing that even though we may get a drop to the downside, I think we're creating some form of a bottom here. Now, what I mean by that is that we still could spend the next week going down, okay? And we may even test these lows down the bottom here on the S&P 500. So we may even test that in the Dow Jones, in the S&P 500, and also the Nasdaq's actually a bit stronger out of all of them. The Nasdaq has been the strongest one out of all of them. So that's what we're seeing through there right now. We're seeing how the Nasdaq, and if I blow my Nasdaq chart up here and squeeze it up, you can see how the Nasdaq has actually a gap down today. But look, we're still well above this trend line through here. And we have a lot of support and resistance through here. So the Nasdaq, I actually don't see, potentially anyway, no one definitely knows, but I don't see it actually having too much of a down move in the Nasdaq. But when it comes to the S&P 500, or even say the Dow Jones, I believe we actually probably could get a bit more downside to come out of this here. But notice today's move on the Dow Jones was mainly a gap. So it gapped open and then did nothing today. So it wasn't like a big red bar or anything like that, or a big red candle or anything like that. It was just basically a gap on the open. And that's exactly what actually happened there. So again, guys, I'm seeing that we probably could get a bit more downside to come throughout this week. But I would say after this week or so, we're probably forming some form of a bottom here, and then we're likely to rally out. So we haven't actually got that yet, so I still see a bit more downside to come. But it really be really interesting to see if the actual market finds a bit of support here, and then we can actually start to rally out from there. So again, it'd be if we do, especially if the market does, even if we come down through here, this is the last low through here. Okay, this is the last low. So if I get my Fibonacci tool from the low through the high, you can see how that this level through here and this level through here is the 50 to 60% retracement from this short-term move here. So it'll be really interesting to see whether we do hold somewhere around about there and then continue up. If we do that, then that's a very, very, very strong sign that we're about to start the rally and actually start to see a very nice move up. Right now, we're in a very nice downward trend on a short-term basis anyway. So on that short-term downward trend we're seeing, we're seeing that pullback that I was expecting to see, and we'll just see whether this actually does come down through to here and we find a bit of support. At the worst case scenario is that we actually come back down to here to test the new low, okay, and then we start to see a rally back up from there. And if I bring up, say, let me bring up the volume on these here. So I'm gonna bring this up here. So we've got the SPY. Oh, look at that. Isn't that interesting? Look at the SPY. Wow. Ain't that incredible? We had the SPY that it opened today. It rallied right up to my resistance line, rejected it, and closed lower. But we didn't get a very big volume spike out of this here. No volume spike actually happened. So well, again, guys, we've got to wait and see what actually happens here. But I'm definitely sensing that we're not getting that strong solid selling off right now. So again, it'd be really interesting to see where we actually hold up here and what actually happens there. If I bring up the QQQ. Again, guys, I'm looking at the volume here today, and the volume is very nothing. Even though we had a bit of a drop to the downside, and I'm expecting more to come down, even on the QQQ. Look at the volume there. The volume is absolutely nothing in today's session. And so, therefore, that there, and even the DIA, which is the Dow Jones, you can see pretty much a nothing volume there. We're not getting fear, panic volume. And again, just a slight drop down. Same with the actual indices itself. I was seeing that there's not a lot of volume there at all, and same for the S&P 500 as well too. Right, that hasn't actually come through yet, and the Nasdaq hasn't actually come through yet, but the Dow Jones has. When it comes to my software, so that's what I'm seeing through there, guys. Once again, a bit more of a pullback, but guys, get ready for a nice rally to come out of this. Over this next week or so, I believe we're forming some form of bottom here, and then get ready for a nice rally. But the short-term basis, guys, the next week, we could start to see a bit more downside to come on a short-term basis there. So that's what I'm seeing through there, guys, on the overall indices. When it comes to actual silver and gold right now is actually holding my longer term trend line. So this is what's happening here with gold right now. So gold is really interesting because gold is definitely holding my long term trend line, and we're really at sort of this long term trend line coming up, as you can see. If I delete this off the screen because we don't need that anymore, and we're sort of squeezing up into this triangle pattern. So it'd be really interesting to see whether we actually do continue breaking up out of this here, but we are definitely holding this level through here quite nicely. And it's really fascinating to see how this is all playing out the way that I thought it was going to. We did get the drop in gold. We're holding here right now, and I'm pretty bullish with gold long term as well too. So, but again, guys, anything can happen. So if we drop out of this level through here, that's a very, very bearish sign. If we drop below my long-term trend line, very, very, very bearish sign for that. Let's go have a look at silver here right now. Silver's actually holding quite strong right now. So if you're bullish, if you want to see some bullish signs in silver, you'd want to see a very nice rally out of this here. We had a very sharp drop, and then a very nice move up, and then now we're actually sort of just collective, not doing much through here. So if you're bullish silver and you want to see this thing probably form this bit of a bottom here, you want to see a nice breakout bar from where we are right now, to start to see a move back up towards, say, 1650 or something like that. If I bring up my weekly charts with silver though, you can actually see how this is still looking like it's a bit of a false breakout to the downside. How we actually flushed down through here, and then we actually had this move coming back up from there. So we can see that that's what's actually going on right now when it comes to silver there. So really interesting stuff there, guys, when it comes to silver. Is silver a false breakout? If so, it could be getting ready for a very nice move to the upside. Let's have a look at the actual gold stocks itself. The gold stocks, what we're looking at here right now is just a very, very, very not really much going on. You can see how for a while there it was just in this sideways channel. We had a false breakout to the upside. Then we actually broke down. Now we've had a breakdown. It seems like we're trying to hold here for a little bit. So it'd be really interesting to see whether we actually do hold and we start to actually get above this long-term resistance line. If we do get above this long-term resistance line, then that would tell me that that we're now getting ready for a nice move up when it comes to this here. So be watching out for that. If we do get above, say, 2650 again, That's a very, very, very bullish sign for the gold stocks. If we go have a look at the GDXJ, as you can see, right, it actually closed there, closed on this here. We're having a bit of a pullback again. We did come back down and close this gap here. In the GDXJ, that came down and closed the gap. So the gap's been closed now. And so therefore it looks like that it may want to continue up from here. But again, a true strong bullish sign for me on the GDXJ would be break above, say, $36 there. And that's what I'm seeing through there. If I look at my weekly charts, especially my long-term weekly charts, and I look at this absolutely long-term, as you can see, right, if I just bring this out through to here, you can see how that it's been squeezing into this sort of really, really, really strong sort of sideways pattern through here. And so by seeing that and by seeing this this sort of breakout through here, I believe once we start to get back above that 45 level on a long-term basis, we could really, really, really start to see this thing start to pick up and move to the upside. But on a short-term basis, that's what we're seeing through there. So it's really, really interesting stuff through there, guys. SLV, which is the actual silver market. Silver market, as you can see, is actually still holding this resistance level here. And we do have this downward trend line that's in play right now on the SLV. So we want to start to see the SLV get back above this long-term trend line down before we start to see any bullish signs out of the SLV price. And also, if we have a look at the GLD, same sort of thing. We had a big gap up. It's come back down. We've almost closed that gap here when it comes to the GLD. And again, I'm actually pretty bullish with this overall. So I'm expecting some sort of a higher low through here and then continue up. But we'll have to wait and see whether gold is going to do that. Because really, we're not really getting any sort of true strength or true movement in a trend basis. So we're getting sort of a double top. We have lower low. This could be a lower high. Where there's no real true strength in gold and also GLD there. But I definitely am expecting from this chart perspective, right, on this false breakout here, I am expecting to see this thing probably hold and then continue rallying up from there. So that's what I wanted to share with you there, guys. There's actually a lot of stocks, guys, that are setting up for really, really, really nice setups. If we go and have a look at, say, some of the actual banks as well. So say JP Morgan, we've got a few gaps here that JP Morgan's probably going to be filled. I'm actually long JP Morgan right now, guys, myself. And it's like it's a long-term trade, meaning like, see what happens from now through the end of the year. JP Morgan. So I really do believe JP Morgan is going to be a really, really nice stock to be long. But we just have to wait and see how all that plans out. I'm also, for me personally, I also really like Apple as well too. I think Apple's got a lot of strength behind it based on how much cash it's actually got as well too. So we're definitely squeezing up into this triangle pattern. We want to see a very nice hold here and then a break up and out. If we can get that, that's a very, 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 very bullish sign, guys, that we're about to see a very nice move. So it's an interesting pattern across the board, because if I bring up my all-in-one charts again, right, and then the really powerful thing is this, guys, is that if we can start to see some form of a higher low through here on the Dow Jones, some form of a higher low, even if a high low through there, and on the Nasdaq, if we can form some form of a higher low and then continue up, that's a very, very, very strong sign for us to see a movement back to the upside from there. So that's what I'm seeing through there, guys. And you can see I've got the Dow Jones, S&P 500, Nasdaq to the top, and then we also have gold and silver to the bottom, and GDX and GDXJ down the bottom as well too. So that's what I'm seeing through there from a technical basis there, guys, and on a short-term basis. I don't expect this drop to actually be too much, but it's very hard to tell exactly what that's going to be. But I definitely expect to see some again for the next week. Or the rest of this week, I expect to see a bit of short-term selling, maybe even to next week as well. But I'm very, very, very big believer and very strong believer is that we're getting ready to have a bit of a turning point here soon. So really, really interesting stuff there. So guys, if you have any stocks or if you have anything you want me to look at, then please put them in the chat box and I'll be happy to look at them. If any stocks you actually like, any stocks you're actually looking at right now, and stuff like that, then just let me know what you want to do there, and I'm happy to look at the stocks or anything there. Let me bring this up through to here now. Let me bring up my longer term or my candlestick charts here for a minute while I actually go through and look at some stocks now. The thing that I'm looking at here right now, guys, is there's so many stocks, guys, that could be setting up quite nicely for a very nice short-term move to the upside. Like for example, Boeing. I know Boeing has been kicked in the gut something severely, but we could be setting up for a very nice sort of at least a short-term bottom, and then a run back up towards the 50s. My blue moving average is the 52 moving average. And then with the 52 moving average, I see this thing at least rallying back up to that. There's so many stocks that are overextended, guys, that we're likely to see a 50 to a 60% pullback at least. And that's where like even on the S&P 500, if I look at the S&P 500, and I bring up, say, the S&P 500 here for a minute, let me see if I can. Then on a short-term basis, if I bring up my Fibonacci levels, then I see the S&P 500 at least getting back up towards, say, the 29,000, even up to even a bit higher than that, probably overshoot to about the 3,000 level. I see the S&P getting back up to there. And like if I see this drop right now that's happening right now, again, it's probably going to be a very short-term drop, and from that we're probably likely to find a bottom. We may even test the lows. Like we may even continue down here to test the lows, but then we're probably likely to rally, and the rally is probably going to last maybe a few months, and then from that rally we're likely to get to at least 3,000 there. Now that's going to be the question mark whether we do break past that or not. Why? Because if we can't break past that sort of 3,000 level once we get there on the S&P, then this could be spelling a very major top on those long-term charts. Those long-term charts on the weekly basis there, guys. Actually, let me just do this here so I can just remove these moving averages because we don't need them here. On a long-term basis, guys, if we do get it, we're probably expecting some sort of a very nice sharp rally out of this, guys. That's a given. Okay, that's a given. And again, a rally back up to around that 2,900 to 3,000 level, I do see that happening. So that's sort of what I'm seeing through there, guys. A short-term movement, we may even see a double bottom here, but again, guys, I do see a very nice sharp snapback rally of a 6% plus out of there. That's where you want to be careful, because if we start to roll over there, we could be forming one massive sort of rounding top formation there. But I definitely do see a very nice sharp snapback coming real soon. And again, guys, I'm going to quote myself. I'm going to say it again. Over the next week or two, there's a lot of shakiness in the markets. Okay, a lot of shakiness in the markets, which means, and what I'm saying there is that we still could see, go back to that daily chart here, we still could see a nice continued moving down for the next week or so. But over the next week or so, we're likely to find a bottom, and then we're likely to have a very nice rally from there. And, guys, and like for me personally, I'm long I'm long stocks, and I'm long the SPY and stuff like that. Once we actually get to, say, that 50 to, say, even that 60% level there, which is likely to happen over the next 2-3 months, once we do get there, guys, you better believe that I'm starting to unload a lot of my positions that I've got there, okay? And so that's what I'm seeing through there on the S&P 500. Same for the NASDAQ as well too. The NASDAQ has the NASDAQ once again, the Nasdaq is quite strong, but again, I see at least a 62% retracement level there, a 50 to 62%. The 60% is actually up here, the 50%, which is major resistance. So that's actually a bit closer there on the Nasdaq, and also let's actually just, this is the Dow Jones. Let me just delete that. All right, delete that. All right, once again, even on the Dow Jones, guys, when we're looking at sort of retracement levels there, I definitely see that the Dow Jones is probably likely to retrace back up towards the 2,500 level there, guys. If you look at even in 1929, guys, the 1929 top in the markets, we saw a very nice sharp crash, and then we saw a 50 to 60% retracement, and then it started a secular year bear market. And that's what we're likely to get. Okay. But if we break past the 60% level on a very nice strong basis, then this is not some form of top pattern, and then we're probably likely to continue rallying up and closing that gap all the way top up there, which I still firmly believe we're likely to do that. Now, it may take a while for that to happen, but I still firmly believe that this gap up the top here is likely to be is likely to be closed. Same for the S&P 500. Again, massive gap there on the S&P 500, and same for the Nasdaq as well. So if I look at that there, guys, and I look at, say, the actual, if I actually look at, say, even some of the indices, say for example the transportation average. If the transportation average holds here, guys, and we start to really break up, we're likely to see a very nice move right back up to about probably the 175 level on the transport. The Russell 3000 level has actually a couple of gaps here. So this is the one gap here we have. You can see how that we actually got right to that resistance level there, as you can see, and now we're actually breaking down. So it'll be really interesting to see whether we do hold here and we continue back up again. But again, overall, guys, even if this thing does happen, I find a bit of a bottom here, and then we're likely to rally back up to around that 170 to 175 level, at least the 170 level there. And the Russell 2000 level, the Russell 2000 actually has two major gaps that are likely to be filled on a minimum basis. So get ready, guys, right? Get ready, because this is going to be a very, very, very nice rally back to the upside. And even if it is just a short-term rally in a big scheme of things, what I mean by that is a 2, 3, 4, 5 month rally. Even if that's the case, then that's what we're likely to get. What happens after that? We'll just wait and see, right? But we're definitely likely to form some form of a bottom here, guys. No doubt about that. But again, guys, the market will tell us when that's likely to happen. For right now, and I'll say it again, for right now on a short-term basis, for the next few days into next week, I definitely do see probably a bit more weakness coming into the market. So a bit more downside. But I believe where we are right now, we're forming some form of a bottom. And then we're likely to start to see a rally to the upside. Okay, guys, if you have any questions, leave them in the chat box there. Any stocks that you want me to look at, then just let me know. That's where, like, even for Apple, I truly believe, guys, Apple, this big gap up here in Apple, which is actually not that far away, I truly believe that gap is going to be filled on Apple. So very, very, very excited about that, especially with Apple, guys. Like, don't bet against Apple, right? Especially how much cash they've actually got in hand. Like, they could probably shut down for 6 months and still survive. 12 months, 2 years. Like, Apple's pretty cool. So that's one stock I definitely wouldn't want to be short right now, which I'm not. I'm actually long right now with plenty. I'm long options. But again, I'm with plenty of time. My expiration is December this year. That, and also JP Morgan as well too, December this year. So again, I'm expecting more downside to come out of these markets, but I believe we're getting to form some form of bottom here. once we even with JP Morgan, once we do start to see that 50 to 60% rally, I'll be looking to start to probably even get out of that as well too. But again, I've got December options there, so I don't really care what happens on the short term. We'll see what actually happens overall in that. The physical silver and gold stores are empty. You can't buy anything. What do you think about that? Yeah, I've actually heard about the actual physical price is actually disconnecting from the actual paper price right now. So yeah, I don't really think anything about that. I just think a lot of people are buying that up right now. Yeah, I don't really think much about it maybe as a long-term perspective. Gold and silver is probably going to be a really, really, really nice sort of bet there, if you're going to call it that. Then yeah, because what's likely to happen, right, guys? What's likely to happen? I believe over the next 5 years, we're likely to go through another big boom in the overall markets. I believe this is just a mid-cycle correction before we see another move up. Because guys, they're going to keep printing money, right? They're going to keep pushing this market higher, like you know that, right? And they're going to keep doing whatever they can to keep this market up until they have to be forced to raise the interest rates again. That's just what I think anyway. And from that creates another boom, but then eventually it's going to create inflation. And then with that inflation is going to be bullish for silver and gold. Now that inflation may take 3 or 4 years to kick in, guys. We don't know. But especially here in Australia, I see another 5-year bull market coming. I see this is just a very nice, healthy pullback. We've done pretty much almost 50%. Actually, let me just double check that. So if I look at the Dow Jones here, and let me bring up the weekly chart. Actually, let's go to the S&P 500. Let me bring up the monthly chart here for a minute. From the ultimate low to the ultimate high. Oh, we did almost 50%, didn't we? I'm pretty sure the Dow Jones actually did 50%. Yeah, so just above 50%. This is done. So this is actually a really, really, really good reset, guys, in the overall market. So this has already retraced almost 50% of this entire move down. So that's actually a very nice correction in an overall big bull market. That's definitely reset a lot of things that's happening right now. So that's why people are saying, oh, I'm expecting this market to go down a lot more. Maybe I wouldn't be I wouldn't sort of be betting on that. As you can see, right, this is, that was actually the 50% level. So it got down to less than 50% of this entire move and bounced. That's not a coincidence, guys, right? That is not a coincidence. Let me actually do this here. So these long-term charts are definitely starting to come into play now. So from this low point to this high point, look at that. Less than 50%, and now it's holding. That's not a coincidence, guys. That is not a coincidence when the market holds from less than 50%. Do you know what that means, guys? Less than 50% is a very, very, very powerful move. And if you understand momentum out of the markets, momentum out of the market simply means this. Simply means that if we get a nice move up, right, and then we get a move down, and it's 50% of the move up or less, and then continues up, that's actually a very powerful momentum move. So if you see that on a daily chart, and then it continues up, it's likely to continue breaking past, and we're likely to continue breaking up. So, and what I guess what I'm saying there as well, let me just delete this off the screen here. This actually could just be, if we look at this here, right, this actually just could be a mid-cycle pullback, reset, before we go for another run, guys. Like, we just never know, right? So, you know, guys, and people will say, oh, this is definitely the top, and so on and so forth. I don't know about that, guys. I'm not too sure we're actually at the exact top in the markets right now. You know, just like people say, like this is the biggest bull market in history. Well, I don't know about you guys, but when something starts back here at 83, and do you realize pretty much for 17, almost 18 years, we were actually going pretty much up. Apart from a few months, 1987 and 1999, we actually were in a pretty much a pretty big bull market through here. So, as like people say, the longest bull market in history, apart from the 1987 crash, which was just what? Which was just a midterm cycle. And if we actually comparing this to 1987, look at this back here, right? Look at this here. So we were already in a bull market for what? For 5-6 years, and then suddenly this happened. 1987. Oh my God! The top's in! The top's in! The top's in! Right? Look at the big, massive crash. Big, massive crash. Down 40%. Next month did down a little bit more. Then we held. And then that just created a base for us to start another secular year, few year bull market. Right? And then we continue up. And then guess what happened here? Look at that month. This is a monthly chart. Bam! 99. The top's definitely in. It holds and then continues up. So, guys, that's what I'm saying. Like, don't be too quick to rally. Like, 50%, we've seen this move here. So it's going to be really, really interesting to see what actually happens here and whether we do hold up here right now. So again, guys, this could just be a mid-cycle before we actually continue up here. All right, guys, let me actually continue on now with some questions here. What about all the bankruptcies that's coming out? Ronnie, I believe the pullback we've had, I believe the market's already factoring that in. Excuse me. I believe the market's already factoring that in. The market knows there's going to be bankruptcies. But the market is such a smart thing. That's why I always say, guys, the better we can read the chart, the better we can read the market, the better trader will be. Because the market and its infinite wisdom is probably the thing, right, to focus on there. And that's why, guys, whenever I get into trouble with these markets, it's because I'm imposing my will, my thoughts, what I think is going to affect it, instead of saying, market, what's going on? Because the market can factor things in. That's the reason why the market sold off so much. Why? Because it's factoring in bad news. Like, do you realize that when the employment numbers came out last week, really, really, really bad news, right? Guess what? The market went up. I guarantee you there were so many people saying, oh, this is just an easy bet. This is definitely going to be a bad number. I'm short in the market right now. And then the market goes up next day. Why? Because the market's already, this sell-off here, which in the Dow Jones has been 50%, almost a 50% sell-off of the entire move up. It's factoring, that sell-off that we've got is factoring in, right? It's factoring in everything else, everything that the market knows is going to come out with this here. That's why the market is such a pretty powerful thing. So I hope that makes sense, Ronnie. I know for sure there's a bunch of companies that are not going to make it. Yeah, you're exactly right. You're exactly right. But I do believe over the next few months, things are going to really, really start to pick up. And by the end of this year, I believe things are really, really, really going to start to head up pretty quickly by the end of this year. And the reason why I say that, guys, is because if you look at what Trump's doing right now, he's already thinking after the virus, right? He's already thinking, how do I get a stimulus package to start building more roads and doing this and doing that? What do you think that is? That's putting people to work as well too. So I really, really, really do believe, guys, that this is just a midterm pullback through here. Once this whole virus thing is done and over, then the market's gonna go. Market's gonna really, really move up quite strongly. Now, again, guys, I may be wrong. I may be right with that. We'll just let the market do the talking for us there. Right now, guys, for the last week, I've been saying get ready for a pullback. That's happening. I see a bit more of a pullback happening, a bit more weakness. And then over the next week or so, we're probably likely to definitely find some form of a bottom. We're probably basing a bottom right now over the last month, if we're looking at the markets. And it's interesting, guys, if you see my top charts, my arrows, if you see them on the S&P, the NASDAQ, and the Dow, that's every single day where that's the day the WHO came out and said pandemic. It's interesting that we're still around that level there. And that's supposed to be the worst time, right? So it's very, very fascinating. Hey, John. How you doing, man? Would you be able to chart ELF, please? ELF. Let's go to the weekly chart. Let's go to the daily chart. Very, very, very strong downward trend. But by looking at ELF, if we can start to see some form of a hold and we start to see a strong move up from here like this, then we're probably likely to see a rally back up towards the $15 level there. I see definitely some form of a snapback with all these markets. Get ready for this pullback, guys. It's going to happen. Next week or so, there's going to be shakiness, because that's probably going to be the worst time for what's happening right now. But after that, we're going to be on the other sides, and you watch this market rally. It's going to be nice. Get ready for it. Hold on to your horsies. Horsies. So that's what I see there right now. We're definitely really overextended from that there. If I bring up this chart here to see where we are when it comes to the 52. Yeah. So I see this thing, at least if we start to create a higher low and breaking up, I definitely see this thing rallying right back up towards the 52 moving average. We're we're well overextended. So if we create a higher low, if we create some form of a higher low here soon, and then we start to see a very nice sort of move up from here, so to speak, like that. Then that's what one of my old mentors used to call a gift from God. When it's so far away from the 52 and you get a higher low, it's likely to retrace back into the 52. So, yeah, that's what's called a gift from God, by the way, guys, if you get that. It's a gift from God because the market, as you can see, the market spends hardly any time away from the 52. And if you look over history of any stock, you'll notice that when it gets too far away, it likes to come back to it. Now, how long that too far away is, we just don't know. But that's something I definitely learned from one of my earliest mentors, actually. It's like let's be too far away from 52. We're likely to get a higher low. So, guys, there's a lot of good buying opportunities right now that's going to absolutely rock this out. Rock it out with the socks out. Really, really is. So, you watch, guys. You watch. You come back in a month or 2 months, or you come back by what's right now, March, April, May, June. You come back by the end of June and you watch. A lot of these stocks would have had a very nice rally back to the upside. But over the next week or two, next week a bit of a shaky basis, and then we're on the other side of the hill of what's happening right now, and get ready for it. So that's what I'm seeing there with ELF. But if we don't create the high low and we continue down, then it's a very, very difficult thing there. But I do see overall a snapback coming. Thanks for your work, no problem. What if Apple goes to 150? To 150? It could do that, couldn't it? What if Apple goes to 150? There's going to be a lot of support around that 180 level, and then yeah, then that long-term trend line coming down there. This is what's happening with Apple right now. If you want to know what's happening with Apple long-term, is we are definitely at two major levels of resistance. So, support. Let me bring this chart up. Let me bring this weekly chart back up here again. Let me delete this off the screen. Look where Apple is right now. Two major levels of support. Very, 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 very strong support level there on Apple. Apple's had a very nice retracement. I definitely see Apple being a very nice, good buying opportunity. Especially Apple. Don't fight Apple. It will always win. But anything can happen, right, guys? Anything can happen. But again, if I'm a betting man and I actually have my money where my mouth is, what I'm saying right now, I'm long Apple right now. So from now through to the end of the year, if we can get a very nice rally out of Apple, you know I've done pretty well out of it. I've got a very good, decent sized position on it too. So we'll just wait and see. Especially if we can create some form of higher low out of this, then bring it on, bring it on, bring it on. Hey John, if I was buying 2022 GDX call options, would this be a smart move? If not, why not? Been a big fan, listened to you for years. Oh, fantastic, Matthew, fantastic. Well, I appreciate your support there, Matthew. And I hope that out of the years that I've been doing this, I hope you've been learning something. And Matthew, if you're watching me last year and going into this year, you'll know last year I actually had a lot of really right calls that I even made public on YouTube. And 80-90% of the calls I was making last year, a lot of the stocks, Goldman Sachs, JP Morgan, Tesla, even Boeing, for Boeing to actually have a move down and stuff like that. If you guys have been watching me last year, I got all them right. Most stocks I called. The one thing I did get wrong was how far this was actually going to drop. So that's where a lot of people look at this guy's wrong. He doesn't know. If you actually go look at my history, if you look at my success rate of the things that I've even called out on YouTube in public, over the last 12 months, 80% of the stuff that I said that was going to happen has actually happened. No, probably 90%. The 10-15% where it actually hasn't happened was like recently, where I said the market is likely to find a bottom, and I didn't. That's the one thing I did get wrong. But now the market has come down, and I've pulled my head out of what I think and reanalyzed the market and let the market do some talking. I'm now coming back to you with exactly what I think, which was gold's likely to have a pullback. Bam, it happened. The stock market's likely to start a pullback. Even yesterday saying, here it comes. Bam, it started already. So I'm back in tune, baby. I'm back in tune. So your answer to the GDXJ, I wouldn't be doing anything with the GDXJ yet. Okay, yet. The reason why is because if we have a look at the GDXJ here on a longer term basis, not yet. Because it may take another 6 months or more, Matthew, for this to start to really build a base. It may take even another 12 months for this thing to just float around for a while before it starts to break out and starts to make a move. So that's what I'm looking at there when it comes to the GDX. Now, obviously, you can do whatever you want to do, but just understand, even if you are buying 2022, I would still wait for some form of a nice breakout. If we can get a nice breakup out of this level through here, and as you can see, even on the monthly charts here, if we can get a nice break above my longer term level through here, let's go back to my weekly chart. So above, say, $50, then that'll be the key for me. That's telling me we're getting a very nice breakout, and we're probably likely to start to see the move up from there. Same for people that are silver. Like I'm long silver right now myself, SLV, and I'm long this right now. So it'd be really interesting to see, to see what actually happens with it when it comes to silver and SLV. We may even get a bit more downside coming with SLV. And the reason why I'm bringing that up is because if I want to buy some more SLV, because I think SLV is going to be a very nice movement to the upside. But for me, the smart thing would do would be the wait for this in the break back above up to 16. And then if we break above that and we start to break above the $18 level, which is my very long-term trend line coming down, and then also this level through here, as you can see, then my longer term, this longer term level, okay, if we can start to break above here on the SLV long term, my goodness, SLV is going to go absolutely burko. But that may take 12 months to happen, guys, because it may rally up and pull back and sideways and fart ass around and then start to break. So, but it's going to be really, really, really interesting. Is this going to be some form of a false breakout? Because we did break below these major low levels here, this major support level. If we do continue to rally back up, that's giving me a very, 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 very strong sign that this is the final low, the final countdown before a secular 3, 4, 5 year bull market. But you just still need to wait for confirmation. So we're experiencing it right now. And then, yeah, back, say, 2010, 2011, over the next decade, I see that type of action again as well too. All right, so Sonia says, if we roll over at 50% to 60% retracement on the Dow, how far down from there do we need to go before it considers a lower low? You would need a lower high first, Sonia. So if I go back to my Dow Jones chart here for a minute and bring up that's the weekly charts. We would need a lower high first, I would say. So, yeah, we've already made a lower low on the Dow Jones. So if it rallies up to make a lower high and then rolls over, then that's a lower high. Then we're probably likely to see a move down. But I don't know, guys. Like I just look at this overall chart. I'm like, yes, we had a very strong pullback. We retraced 50%. Now it's holding. Like we've already had a very nice strong reset, guys. Like that's what people are not. I'm not seeing through there. We've had almost a 50% retracement of this entire move down, of the entire move up. That in itself, guys, is a very strong price reset in the markets. Amazing time to be buying stocks. It was. We have a world crisis. The bull market is over for the moment. I doubt that with no disrespect. Okay, Ronnie. Okay. As I said before, guys, next 3, 4, 5 months, come back to me and say, you know what? The rally did happen. We did get a very strong rally. And John was right. But what happens from there, guys, I don't know. But a nice 50, 60% retracement of this entire move down. Get ready for it. Because, guys, as I said before, guys, the market right now, the Dow Jones and the S&P and the NASDAQ and all that sort of stuff, this massive drop we've had already is already factoring in all the bad news. Once again, that's the reason why when we got bad numbers last week, the market went up. Why? Because it's already factoring it in. If they announce a vaccine, the market will pop. Nah, maybe, but they won't announce a vaccine until next year. So that's when it comes to the actual market itself. I don't think they're going to say, okay, we're now ready to, to release a vaccine. That won't be next year. That won't be until next year. Remember, guys, the market is a leading indicator. Okay, the market is a leading indicator. So the market will rise first, then the economics fundamentals will rise after. It's a leading indicator. As you can see, right, the market dropped a lot. Then the World Health Organization came out and said pandemic. Then there was a national emergency. Then the last month, that's when things have been major issues in America. Major, right? Like look at the last month, right? The last month, the cases in America and New York have just skyrocketed. What's the stock market done? Do you see the correlation between that there, guys? So the last month, the overall booming of cases in New York has been just through the roof. And it's getting really, really bad right now. But what has the stock market done overall for the last month? Pretty much nothing, right? Yeah, so if you look at the last sort of the last month, which is about 20 trading days, it's done nothing. But everything's been really, really, really bad for America, especially New York, right? The heart of, the heart of the stock market, basically. So I want you to try to think about that for a minute. How come New York and everything's getting really, 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 really bad and has been really and getting worse and worse and worse over the last month? And all the cases have been really, really bad. And it just seems like this is never going to get out of control. But for some reason, the market's pretty much done nothing for the last month. Wouldn't you, if the case was bad, something bad in the markets is going to cause the market to continue down? Shouldn't we have been crashing even more for the last month instead of going through a very nice rally? What is that? The market's already factored in. The market already knows this bad news is coming. Now it's setting up for a big rally because it knows in another 3 or 4 months time frame, guess what? Things are going to get back to normal. Or things are going to pick up anyway. How do you feel about SLV doing a big gap down on March 16th? And then doing a big gap up on the 24th. That could be some sort of island reversal if you're into patterns and stuff like that. I did see that. Yeah, so that could be some sort of island reversal in SLV there. So what I'm looking at here with that, an island reversal, guys, if you're looking at patterns and stuff like that, it's actually a major come on, where are you? There you go. Right. So an island reversal, guys, just so you know, is something like this. Let me see if I can bring out my good old Snagit tool for a minute. Right. So an island reversal is basically something like this. Okay. So the market's coming down, 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 down. This is actually, but then the market gaps, it does nothing, and then it gaps up. You'll generally find this here, which is called an island reversal, because it gaps down, very last big gap down, and then goes sideways and gaps up. So if we start to see a move back up, if we start to see a very nice move back up in SLV, then you'll say, okay, this whole scenario through here was indeed an island reversal, which is an end of trend indicator and a reversal. So we go from down to up. The very, very, very powerful end of trend reversal indicator there. And again, I don't talk about that much, but I talk about a lot of stuff about that in that free trading course at johnsfreegift.com. So go grab it, go check it out. It's going to help you Um, does that count as a gap down getting filled? Never seen that before. Would love to get your perspective. Love your channel. Oh, well, there you go, Matthew. I hope that helps you out, man. It's actually a potential. We don't know yet, but it's a potential end of trend sort of indicator. But we have to wait and see. If we do continue up from here, and we definitely start to break above, say, the $14 level and stuff like that, then yeah, it was an end of trend. But especially when you get that when the market does gap down, if you look at the actual SLV, we definitely see that there's a major gap. There's a bit of a gap here that I do believe will be filled right there on the SLV price. So that's the gap I do believe will be filled. This gap here, guys, I'm not the gap down the bottom here. I'm not too quite sure. So we'll just have to wait and see what happens there with the SLV price. So yeah, so the actual gold, which is my chart to the bottom left, you can see how that's squeezing up into that into that triangle pattern there, and so that's actually still holding there. It'll be really interesting to see if we do get that breakout or not. Silver, which is the second chart to the left, you can see how that's just basing out holding there. So it'll be really interesting if we actually do pop up as well too out of this, because we do have a bit of a trend line coming down from here to here. So we'd want to see the trend line get above that. Yeah, interesting. Thanks, John. I've been watching for a long time and appreciate your work. No problem. New York Stock Exchange X still went up today with these trillions being spent on America, infrastructure, steel, copper, industrial metals. Might be a good time to play once the virus goes long on X. There's actually a big issue there. No, I wouldn't be going long. No. It's still in a very, very, very big bear market here, Matthew. So trying to go long this market would be very, very risky right now. But just remember, guys, and just remember too, Matthew, right? Like if your heart of your trading is not based on some sort of a system, then you're only really, really gambling. It's only times like this, guys, that I take some of my profits that I've made and I put it into the longer term plays. SPY, Apple and stuff like that. So that the trades, these sort of other trades I'm doing right now, JP Morgan, Apple, SPY, those sort of plays that I'm doing, they're actually coming from part of the profits that I've made from trading my trading system. So it's really, 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 even if this whole world turns to custard and all those things, those options go to zero, I'm still good to go. So that's the way I've set it up. One, because I have my trading system. And secondly, I've only lost part of the profits. If that happens, which is doubt it's going to happen, but if it does happen, I've only lost part of the profits that I've made from trading. So I'm up either way. That's why I'm happy, guys. No matter what happens, like I'm happy. If it goes up, fantastic. My account goes up even more. If it goes down and the whole thing turns to custard, that's okay. There's about 30% of the profits that I've actually made from trading in the last 12 months is going to be blown up. Cool. 70% of my profit's still there. And I had a very good year last year as well too. So that's why I'm happy putting on a few other trades right now. So that's what I think about X there, Matthew. I definitely wouldn't want you touching this. I'd want to see this thing really, really, really start to change some trend before I get involved with this. Sonia says, John, I think my question may have been confusing. If we rally back 50%. Oh, okay, rally back to, and then down and roll over, at what point would you think we are headed for a secular bear market? Thanks. Oh, okay, that makes sense. Well, yeah. Once again, Sonia, you would have to wait. You would have to see that lower high come into place, and then some strong selling to come down. So on the Dow Jones, we would have to. Even the S&P, yeah. So once again, we're likely to get that nice rally out of it. But if we do create that lower high and we start to head down, but it's so interesting because the last low was around 2200. It's such a deep low. So if we rally up and then create that low and then start to head down, as long as we need to start to create, we need to see a major lower high here first. So to answer your question, Sonia, if the market does rally up on the weekly chart and then create some sort of lower high and breakdown, again, that'll probably take 12 months to form overall, if it is going to form that. So, alrighty, guys. Well, that's it for me today. Hope you enjoyed today's session and what we went through today, there, guys. And I'm going to be doing some more of these sessions. And I hope this helped you out. And I will speak to you guys soon. See you guys.